we saw the market up about 1.34% yesterday. What is the general feeling on the floor right now? Would you say confidence is sort of inching back into our markets, or of course was it just a one-time thing?
Generally, I think that we're kind of seeing an improve in confidence in the market, and the reason is because Dangote Cement launched the additional 5 million ton capacity of the Obajana cement, and they did the groundbreaking for an additional 3 million tons. We think that this would give investors some sort of confidence, and going forward we should see the market react positively to this change. And we should also remember that Dangote Cement currently controls about 22% to 25% of the market. So if confidence is in that particular stock, we expect to see the market move as well.
So you're saying, Efe, that we're going to continue to see the market performing well on the back, of course, of Dangote Cement. But I want to ask, what investment strategies are we seeing on the floor? Of course, when it comes first to our domestic investors, you did tell me earlier that we are seeing a sort of buy and hold strategy.
Yeah, for the domestic investors, I think we see them tackling investment approach in a sort of buy and hold strategy. So most of them come into the market and then they just hold their position. Should the market go further up, or should the market decline, you really do not see any sort of participation from their end. So I would say that domestic investors engage in buy and hold strategy.
Well, Efe, what about our international investors? Because we do know that about 80% has been said 100 times that 80% of our markets are sort of dominated by international investors. And of course, we've been seeing volatility in our markets. What strategies are we seeing in their case?
For the foreign investors, you are quite correct that they control above 80% of our market. But due to the fact that they are more sophisticated investors, we tend to see them focusing on the constant mix strategy. So you find a case where the investor comes in and focuses on a particular stock limit or sector limit or equity limit. And then should the market move further upwards, they tend to reduce their holdings. And if the market goes south, they tend to increase their holdings. So you tend to see the foreign investors become more active in the market because the constant mix strategy is an active strategy, and it's kind of concave in nature where you tend to sell as the market goes up and then you buy when the market goes down.
But going forward, Efe, we do know that we're coming to the close of Q2. Of course, we're expecting results. Give me a picture of how some of the indexes are performing, especially the banking sector, because we do expect results coming out of that sector very soon. How has that index performed?
The banking sector index so far has been the best performing index, although over the last week we saw a drop negative 0.9%. But we think that investors are anticipating good half-year results going forward, and we would expect to see the banking sector regain its position in dominating the market. Remember, the banking sector also controls about 3%. So when investors focus more on the banking sector due to the expectation of huge or positive performance, we expect to see the market do well in the next coming quarter.
Well, Efe, what are some of your stock picks, though? I mean, when it comes to the banking sector, we do know GTB has been quite a good performing stock. We've also seen UBA performing well. What are some of the stock picks for you?
I would want to focus on First Bank and GTB, and the reason is due to the increased sovereign debt crisis in the Eurozone. We tend to see the foreign investors who control a huge amount of our market. We tend to see them exhibit risk aversion and loss aversion as well. So they tend to focus on liquidity and depth of the market. So we expect them to move towards the banking sector. And when you look at the banking sector, to be safe, you need to play with the tier 1 names. And the top performing in that group is First Bank and GTB, and the reason is because they have a lower cost of funding. This can be seen in their net interest margin. First Bank has, I think, 9.5%, and then GTB has about 7.8%. Also, due to their scale, you tend to find them dominate in the market. You can also look at this in terms of their efficiency. So First Bank on its own, cost to income ratio is about 69%, and then First and GT Bank is about 52%. So these are good names in that particular subsector.
Well, Efe, I mean, I'm curious to know. I mean, we've seen a sort of lackluster trading on the stock exchange in the past few weeks, but we've also heard that this morning the SEC DG sort of has been sent on compulsory leave. Now, I'd love to know how that is going to affect trading. I mean, will we see it sort of pull confidence down, boost confidence, or have no effect at all? What do you think, Efe?
Sorry, I did not get the question.
Well, we're expecting to hear, we've heard reports that the SEC DJ has actually been sent on compulsory leave by the NSE management. Now, I'm curious to know what effect this will have, of course, on the market today. Do you think it's going to pull investor confidence down, or do you think it's going to have no effect at all?
I think in the short term, we shouldn't really see any effect from that pronouncement, but over the long run, when investors tend to have settled down and digested the cost and benefit of the pronouncement, then we'll see the market reacting either positively or negatively. But at the short term, I don't see it having any impact.